connecting from, we have a few more people connecting from the waiting room, and we are now recording. And so thank you for joining us. I'm going to use my best college professor impression here. I hope you're in the right place. This is eClosing 101 for all the things that you'll need to know eClosing in Massachusetts. We want to thank Encino for sponsoring this topic. You'll hear from them a little bit later on. And what can you expect? So thank you to the MMBA Technology Committee and to Debbie Sousa for bringing us all together on this topic. You know, there are a lot of questions, and as you'll hear today, there are even some misconceptions and misunderstandings about eClosing. And as Massachusetts looks to adopt the legislation and regulation that will make it possible in the Commonwealth, we wanted to run through some of the hot topics, key questions, and then give you a chance to ask questions of our panelists as well. So my name is Jeremy Potter. I'm the president of Title Look. I'm a board member of the MMBA, and always interested in mixing it up with those new, innovative, and modernization pieces of our industry that we need. And we will run through an agenda today. I'll let each panelist.
Right, but can you please,
if you're not on mute, we can hear you. Just FYI for one of the audience members there. We were going to run through an agenda today. You'll hear from each panelist, and they'll introduce themselves as well. But we're going to talk about what is an eClose, what does it mean to eClose mortgage, and what types of eClosing we're seeing in other states that are likely and could be new for lenders and operators in Massachusetts. We'll talk about the production stats, what we can expect for adoption. So what are the benefits of eClose? We'll talk about the business practices and some of the strategies for implementation. And then we're hoping to give you a lot of content around why to make the case to your institution that this is going to be a meaningful part of your business. And we expect it'll be the future of settlement in a lot of ways. And again, we'll talk about Massachusetts specific regulations, the Massachusetts Secretary of State, and then we'll open it up to questions and answers. So thank you all for being here. We're excited to jump in, and we'll do that right now. So Jay, we'll start with you. Give us a sense of who you are and where you work, and then lead us with the question of what it is to eClose a mortgage.
Sure. Thanks, Jeremy. Thank you for the opportunity to be here. J.R. Nasia, VP Closing Solutions at Encino. And diving right into eClosing, right? What does it mean to everybody? So if you talk to in an average conversation with folks, you're going to hear the term eClose. And that could mean that you're taking at least some part of that 60-page closing document and conducting some sort of execution in an electronic format, right? So that we're talking generally, we're going to say I do eClosings. And that would mean that somebody listening to you is going to assume that you're doing something electronically. As you get deeper in that conversation with the same folks and the same crowd in a more advanced level, you're going to start hearing the term e-mortgage then. And how do they relate? Essentially, you're going to have an e-mortgage if at least that promissory note that was signed in paper, historically still is signed to some extent in paper, is signed with an electronic promissory note, which is commonly known as an e-note. So if you have conversations potentially with this panel, you're going to hear, yes, we purchase or we do hybrid closings, but then we also do e-notes through an e-vault. And so then in short, they'll say we do an e-mortgage. So they are related, but just know as you're having that dialogue, it's okay to say eClose, that's what you're hearing, that's what you'll start, but then you're saying it's coming into an e-mortgage because you added that promissory note through a vault to be part of that closing. And then, the star of today, Ron. If you're adding Ron to this conversation, you're also going to hear, yes, we do e-mortgages, or you may hear the term full eClose. So what I tell people, if this is where you're starting, embrace all of those terms. They all mean something, and most of the time it at least means you're starting your journey to sign electronically.
Yeah, thank you for that clarification, because I think a lot of times there are one of the misconceptions when you talk about eClosing is that there's a piece that is either eliminated or missing And I think, Jay, you did a good job saying like, no, actually what's happening is you're doing it digitally or you're doing it remotely. It's still there. It's still part of the closing. It's just we've got this new technology and we have new regulations that unlock how in which you want to choose. And all of those different variables are still going to be under eClose. They're just going to be, how does your institution or has a institution talk about which pieces you've decided to put together for your eClosing. So Raj, we're going to flip it to you real quick. Obviously, we can see where you work because of that background. So we appreciate Freddie Mac's willingness to jump on the MMBA webinar and talk to us. So you view all lender types, all business models across all of those single family mortgage deliveries. Can you talk about what types you're seeing and how Freddie Mac views, eClosing that Jay just described?
Yeah. Good afternoon, everyone. And thank you, Jeremy, for the question. So my name is Raj Finiganda. I'm a product development director at Freddie Mac, leading e-mortgage program. And as Jay said, e-mortgage is defined as a loan that has electronic note. And from my perspective, when I think about e-closing, there are really two variations, right? Broadly speaking, one is a hybrid e-close, which Jay touched on, where you have some documents electronically signed, some are wet signed or ink signed. Typically, what happens in the industry today is in a hybrid e-closing, the note and the other non-notarized documents are electronically signed, and notarized documents are typically ink signed. And the other variation is full e-closing. Full e-closing means basically you have all documents that are electronically signed and notarized. And again, there are two ways to get this full e-closing done, right? One is a remote online notary-based closing in which the notary and the borrower are meeting each other via a two-way secure audio-video live connection and to electronically notarize and sign the documents. And then the other way is to do it through an in-person electronic notary process where the borrower and the notary are meeting each other in a physical location to complete the process. So Freddie Mac accepts all these variations, but the most typical variation we see is the hybrid e-closing in which the note is electronically signed. And just to share some of the details around this hybrid and full e-closing process, the ecosystem in the industry is largely ready for both these types. So if you think about the GSE support, 9 out of 11 federal home loan banks support electronic notes. We have Ginnie Mae supporting it. We have more than 40 warehouse lenders and several aggregators, servicing buyers, sub-servicers. Everybody is ready to accept loans that have electronic note. And from a full e-close perspective, where the electronic notary plays a significant role, we have now laws in 44 states that support remote online notarization, and in-person electronic notarization is possible in all states that have enacted a law called Uniform Electronic Transaction Act, UETA, right? And then the last piece of the whole, the digital closing puzzle is the process of recording a document. And we have more than 2,400 counties that does support electronic recording of a loan document, meaning covering almost 90+% of the country's population. So the ecosystem is there. Several folks are accepting it, both hybrid and fully closing. Back to you, Jeremy.
Thank you, Raj. Yeah, I think that's one of the things that strikes me that is important for Massachusetts, which is an attorney state. And so in an attorney state, I think a lot of confusion or misconception around the closing arises from, well, could I still do it in person if I wanted to? We're about to hear Joe speak a little bit about the lender perspective and Scott speak about the settlement perspective. But the key that, Raj, you're talking about is you can still capture all the benefits of digital, which we'll talk about what those are as well today. But you can capture those whether or not you do in-person electronic digital or you do remote signing. The investors are accepting it. The ecosystem, for lack of a better way to put that, enables it. And in a lot of states, and 90% of the population's recording offices, you can choose. You get to decide how this actual ceremony, the closing ceremony, changes or doesn't. But you want to get these tools so that you've got all of them, and Freddie Mac supports that obviously, and those other investors do too. So Raj, maybe you could tell us a little bit about the data then from other states, because it is going to be important in Massachusetts to think about adoption and other, coming from a perspective where I see nationwide lenders, across all states. I know most of them have adopted some form of e-closing in the other states. So can you tell us a little bit about adoption that you see from Freddie Mac and kind of what we could be ready for in Massachusetts once this is allowed?
Yeah, definitely. Before I jump into some metrics or adoption numbers, right? I just want to reframe what you just said, which is an excellent point you made, Jeremy, which is when you think about all these different things we talked about, hybrid e-closing, in-person electronic notary closing, remote online closing, think of them as different options that will work for different consumers. By no means one method is superior over the other method, right? So anyway, coming back to the adoption itself, industry closely tracks volume of loans that have electronic note. And so based on the numbers, I see close to 7% of all loans closed in the country include electronic notes this year. I'm talking about this year numbers. And the state of Massachusetts actually has exceeded the national average because right now in the state, 9% of all loans include electronic notes. So it's already happening in the state, right? So then, based on what I'm seeing, I believe these numbers are going to grow significantly in the next few years because lenders are embracing this process due to the financial and operational efficiencies and also the positive customer experience, right? On average, just to give some Freddie Mac numbers, on average, every month we approve 2 to 3 new lenders. I mean, this has been happening since last 2.5 years. We're adding 2 to 3 new lenders to our program to deliver electronic notes to us. And as we add more lenders to our program, number of lenders delivering, 25% or more of their volume with electronic notes is also growing. So this year so far, 16% of all lenders we approved to deliver e-notes to us have delivered more than 25% of their volume as electronic notes. And that number was only 12% last year. So clearly, higher number of lenders are delivering a higher share of their business as electronic notes.
I think that's a really key point. However you decide to choose the client experience, customer experience, which we'll talk about in a second, knowing that a lot of the back end capital markets loan delivery side of the industry is already there. And we can expect that, given the numbers you just said, we're going to cross nationally a 10% threshold pretty quickly. And I think one of the things that is curious, I'd love your opinion on this, and then we'll turn it over to Joe and Scott, is, it's probably one of those curves that we expect once it hits a specific threshold, it's going to go quite quickly because that'll be standard operating procedure. Is that how you look at it as well?
Oh, definitely. I mean, that's true for every technology that mankind has seen, right? Electric vehicles, the same thing. Every technology that we have seen, there is an inflection point. And the key driver behind my belief that this is going to grow is because there are some very, very big lenders that operate across the nation, and they have been able to actually ramp up their e-closing production despite of challenging conditions in the last 1.5 years for the industry, right? And same applies to some small credit unions, which operate only 2-3 states. Same applies to some regional banks, some IMB lenders, right? So this adoption is happening across different segments of the industry, not just confined to tech-savvy lenders or small, lenders. It's happening across the industry. So that tells me that definitely we will see, in the maybe next year or so, we will see the 10% number across the nation. And then from there, I think it just starts, going upward.
That's a great point. We're always laser focused on mortgage, but a lot of the institutions you mentioned have been doing this for auto loans or doing it for other types of securitizations, other types of loan programs for years. And so we're now joining that group, but you're right, a lot more to do with how your institution does operational strategy and tech modernization and less about size or less about sophistication. Well, Joe, that's a perfect segue to your perspective. Raj mentioned having different types of closings in order to have different fits for your consumers, for your customer experience. So can you tell us how, from the lender perspective, there's a lot of moving parts here, and a couple of the things I'm curious about are that that feeling that, hey, this is where the industry's going. My competitors maybe nationally are going there, so I've got to have all these different things. How are you viewing it? Are you feeling offensive? You know, it's an offensive move. Is it a defensive move? Is it a must-have? Is it a nice-to-have? Can you kind of walk us through your perspective leading a lender?
Yeah. First, just to introduce myself, Joe Kleiber. I am the mortgage strategy and support manager at Digital Credit Union. So you're right. It's definitely a need to have in this day and age, right? From a competitive standpoint and borrower experience, that's where it all drives from, is that seamless a transaction, but it provides for some operational efficiencies gained there too, right? You think in terms of storage costs of paper notes, when we're talking about the e-closing side, when you get to the RON piece and fully implement that, that's a great convenience to the borrower. They don't have to travel in those instances. So and waiting for that paper document to come back as well, right? That speeds in the delivery to the investors, as to Raj's point, with the majority of the investors taking that on, you have that instant, from the note perspective, that instant signature document. You're not waiting for it to come back in. You're not waiting to send it through the custodian of the investor, or right then and there. So that's really where we see the benefits of it. But again, it's a must-have. It's not a nice-to-have anymore. It's a must-have.
No, that's great to hear. I mean, I'd been thinking a lot about digitizing the entire process throughout my career and in my last few stops. And I'm curious, because one of the things I always struggled with was this idea of kind of layered value. It becomes hard to articulate that you've got value to the consumer in the flexibility. You have value to the capital markets in QC certainty, as well as in delivery. You've got value to the investor, right? That faster through the custodian to the vault, and you got visibility for the investor. And I hope we'll hear better connectivity to the settlement community in a second, the attorneys, as we talk to Scott. But it's always been tough for me to articulate that, because it's kind of like a little bit of all of that. So as you think about it, as you approach this, thinking about the technology piece, the process piece, the delivery piece, do you feel it's the lender's responsibility to kind of pick that platform, because it's your money going on behalf of the consumer to that closing, that you felt like that's how I have to approach this? So we've got really good, I think, value proposition for e-closing. How did you navigate just thinking about step two?
Yeah, I think you bring up a good point, right? And I think it is the lender's kind of responsibility for setting the expectation, right? You can't really force that borrower into that, but I mean, setting the expectation and providing that education to the borrower up front is key to that, and key to the adoption of the end-to-end process, right? There may be some barriers that you can't do the full e-close, but if you can get the majority, to your point, the layering, right? The initial documents, we've been in that environment for quite some time, but now we're getting to that closing stage where you can truly get those electronic versions. So yeah, I think it's really the lender setting that expectation up front with the borrower and educating them to the benefits of adopting it. That's really where it is.
Yeah, I'd heard of one large lender who initially deployed e-closing, asking the branch manager or loan officer to select the closing type, as part of that 1003 or application onboarding. And they got, I believe it was about a third adoption, like a 33%, kind of 35% adoption of eClose. And then they chose a test, and they moved the question out to the consumer portal, the consumer account, and said, as you're applying for this loan, would you like to close electronically, digitally, et cetera? And they had a 70% adoption yes answer to that question. And so I think that's a really good indication, Joe, of what you're saying, which is, as the lender, not only do you get to control, or would you like to control, the experience, like how this works, but then you get to pick kind of who your constituency is and how you're going to serve them. And different lenders, that's the beauty of competition. Different lenders are going to choose different things, and we'll see kind of who wins. But appreciate that perspective, because I think that's a key piece the sales side, the customer experience side is a key piece. And then the delivery side to what Raj was mentioning and what you're mentioning, that's where there's capital markets pickup for the organization. So Scott, hearing all that, let's turn to you as the host of the settlement, the host of the closing. Can you tell us where you're from first? Give us that piece, but then also talk a little bit. As a settlement law firm, you have to work with all kinds of different lenders on all kinds of different platforms. So how do you navigate eClosing from that perspective, and how are you approaching it coming to Massachusetts?
Yeah, thanks for having me first, Jeremy. Good to see everybody. I'm Scott Chris. I'm the president and CEO of Chris Law and Land Closing and Escrow. We are a nationwide settlement and closing firm. First off, I really like that you call the closing the ceremony. I've never heard that before. That's something. So I'm going to use that. I'm going to use that going forward. As far as what we're discussing here and the topic at hand, I think a really good point that I just wanted to even expand upon is this is e-closing in all its forms. There's no negatives. It's one of those really rare things where not only does it promote all of our businesses, whether it's lending, closing, whatever it may be that's involved, but also it's a tremendous boon environmentally. I mean, the amount of savings we are having financially, paper, gas, all of those things, and we're doing a good amount of e-closing now outside of Massachusetts until it becomes legal here. But the savings amazing, and there really is no downside. The only downside is technology. There's some people who are not comfortable with the technology yet, but I think that's like any other technology, like Raj is mentioning, it's going to take some time. But the people who are taking advantage of it, is really they're really happy with it. So we are seeing a ton of it. We are on several different platforms. We would love it, obviously, like in many parts of our business, we'd very much like to be on one platform or even two platforms, but it's just not the reality yet. We are hoping that a couple of the platforms really sort of jump out and take over and are a solution for many of the lenders. The implementation is, like any update to technology, has not been smooth or easy, but we work with our lenders. We're doing a bunch of beta programs now across the country as the sort of test case for full RON, whatever it may be. So, it's a work in progress, but it's probably the only time in the 20+ year history of our business where we can say the negatives just aren't there. We can't find one, for us to just sit in the office and not have to have attorneys drive around and not have to bring, somebody said 60 pages of closing documents. I wish it was 60 pages. It's more like 190. And I know, because I pay for every single one of those pieces of paper. But so, it's a great thing. We're encouraging it. Massachusetts, being an attorney state, tends to be a bit behind. We're a little bit hesitant to change. But I think that once everybody gets in there and sees the benefits, everyone will be really happy. So.
Yeah, to your point about paper, Jay and I used to joke that there's really no reason a bank should own a forklift, but in fact, a lot of big banks, the biggest banks in the world, do own forklifts because they got to take reams of paper off the truck and bring them into the servicing warehouse or the vault or what have you. And so the one thing that we used to say a couple of years ago was like, let's make sure we get rid of the forklifts in banking, and we'll be well on our way. So also true in settlement law firms, of course.
Absolutely.
As well.
Absolutely.
So it sounds like really driven by a lot of different constituents, right? Scott, you just made the great point, which is like, this isn't only driven by consumers. This is not only driven by lender capital markets groups. There's purpose here for almost everybody in the industry. And so, Jay, one of the topics that's kind of been floating around in the first 25 minutes here has been the benefits. We've touched on them as we got comfortable with the landscape of eClose, and we got comfortable with all the different types. But let's dive in. This is, we're going to bounce around here on the panel to everyone to have their opportunity. But Jay, we'll start with you. As a vendor provider of services to the lending community, can you talk a little bit about how you approach the benefits of eClosing and kind of walk us through your perspective?
Sure. Continuing something Scott mentioned, some additional data as we have done electronic closings on the platform. We get record of how much paper you've saved. And, from our partners where we do our e-sign stuff, they've said approximately it's like pulling 2,500 cars off the freeway. So that's the amount of not only paper, gas, storage, and just protection from natural disasters. Chris and Scott, as you go along, you've probably seen that, right? What happens if we lose this paper? Joe mentioned, you have to store the paper, but what happens if you lose the paper? Are we doing any justice to the constituents who expect that what to do, the right thing? So it's all based on that premise, Jeremy, to say, how do you correctly, within the guardrails established within the mortgage industry, how do you correctly eliminate the paper, right? We're not looking to not be compliant, not do certain things the right way. And in an implementation process of bringing these folks into this, now, how are you going to do it? Part of it is integrating them into this ecosystem. I think, Raj, you had mentioned that this is really an ecosystem of capital markets, of title companies, of lenders, of borrowers, all coming together. And one, we have to have the technology for each one of them to do their part, right? Because we're not eliminating any part of it. So you have to have a closing portal. We have a very phenomenal closing portal that we guide the title companies through, right? Here's where you're going to know what type of closing you're doing, who the borrower is, what part has your lender selected for this closing to be a wet sign, e-sign, RON, or electronic promissory note. So they right away, as they're going in, get to see, hey, this is the combination that's going to be used for this one, because of various barriers that you have as you're coming into that inflection point of where this becomes the norm. And I'm hoping for the day somebody asks me, how do you do closings in paper? I need to do it. Now, there might be certain types of loans that you'll always do in a paper, and that's fine, but that's not the majority. It's not the majority today, right? So bearing all of that in mind as you're integrating players into this space, I say definitely talk, collaborate early, often, and a lot. The people you want to bring to that conversation are your capital markets teams, your title companies, every closer in your organization, whether it's a centralized or a decentralized closing, and then bring your IT folks in the middle as well. Because what you're trying to do is ensure, and this may not be everybody's day-to-day cup of tea, but you're trying to ensure that all systems are aligned and synchronous, asynchronous messaging between these systems is going through really well. At the end of the day, the end user, whether it's your closer, your title agent, Scott, at your place, Joe, your closer, the loan officer, anybody in that chain just wants to see that product converted to a tool and says it works for me. So it's just the behind the scenes work that you're doing. So the people that are managing that back end, I say talk a lot early, often, and continue the dialogue, work through what the enhancements are coming. And then beyond that, I would say is be prepared. Scott, I think you mentioned, and it's exactly where you are, where we all are, is people are just a little tired of the tech, the medium, the transition between paper and tech all the time. It is exhausting. And then not willing to potentially go just click a few buttons and learn the tech. I have to empathize with that from being a closer for a very, very long time. Closing is not the time that I want to learn new tech, right? So I need to close this loan. It's the 31st of the month. I have to do these. Locks are expiring. So I could see where they're saying, I'm not going to learn the tech then. So, Jeremy, we've talked about it in the past, is you can't make tech bring it in as an edge case. It has to be the norm. You have to do it for all your easy closings. Your borrowers are in town. Don't try to start with Ron the first time you do it with your borrower overseas. That's a wonderful case to do it, but that's not where you start. You want to start with implementing and integrating that tech into your organizations on the easy closings. Because if you do have to convert to paper, you can go to mobile notary, you can go to the title company, you can do something. Because one thing that's not available to the technology overall, any tech you're using, is the transparency on how your operations work, right? So the tech is going to do what it's going to do, but you may need to do something else with that package. And that becomes obvious only when you dive in, right? So dive in early, work through the kinks, work through your operations, work with your vendor partner to operationalize the tech you're using. And operationalize is simply saying, I have a product, we bought this, I'm going to now convert it to a tool that you can use every day. You don't have to worry about it. It's as simple as using your iPhone for, managing your emails to know what's happening in your kid's school. It has to come down to that part. And Rod, Jeremy, and I have watched it, and Joe, you've probably watched it in your environment, Scott, in yours. We've watched each other remove the barriers. So folks joining today, there are some trailblazers, whose shoulders we really stand on, who went through the pain points. If you're incorporating this now, the pain points have been removed, and they'll continuously be removed. But the folks that started early are the ones that Rod mentioned, right? They're probably getting 25% of their volumes done. And as the floodgates open, they're not doing any new learning. They're just going to keep sending their promissory e-notes out, closing and run, no post-closing, no QC to be done. Your auto certification is done in 2 minutes. You get very close. So talk a lot to your vendor provider.
Jay, that is, I want to highlight that point, because when you think about implementation and your implementation strategy, you really said two key things. One that I love highlighting as well, which is default to digital. So meaning, if nothing, the normal process, the standard operating procedure is digital. We default to digital. There will be processes or cases, as our industry knows from every part of our industry, that you got to pull them off the standard conveyor belt, the standard manufacturing process, but you should have the sort of best strategy is that. However, that leads to a fundamental question that you identified, which is, once you decide that, are you just adopting the platform's workflow as yours because it's new? Or are you taking your workflow and saying, I need these pieces of the tool in this order or in this way? And that seems to be a critical fork in the road for lenders. Am I just adopting the process that the vendor has out of the box for this new thing? Or am I going to say, no, I'm going to keep my process. My process is fine. I just need technology and the tools at each of these moments to digitize it. So let's actually throw that to you, Joe. A lot of people call this crawl, walk, run. I like to call it now, next, later. But from your perspective, how would you recommend those on the call who are facing that strategic implementation question now, hearing about Ron in Massachusetts and preparing, that Jay just highlighted? What's your advice to the folks on the call?
Yeah, so a couple points there. You mentioned the crawl, walk, run, right? So we started this process as a crawl, and to an extent, we're still crawling through it, right? Jay had a lot of good points there. There's a lot of moving pieces, the vendor integrations, all of that stuff. It's not something that you can just buy off the shelf and say, all right, hey, guess what? We're doing Ron's today. It's really not as simple as that, right? So, we started this journey for quite some time, quite some time ago. Digital's in our name. So to your point, Jeremy, trying to get the digital as a default is kind of in our nature. So, we kind of went into the shallow end, if you will, of the pool and started with some of these hybrids and the e-closing pieces, and then dipping our toes in now to the Ron side in preparation for Mass coming online with it. So there are, because of the ton of moving parts, there's kinks, everywhere. Jay also brought up, the vendor relationships. That's another key piece to really identify, because your vendors, right, they may have contracted out pieces of that to sub vendors. So now you got to go through an even more due diligence piece of that process, right? So you want to make sure who's doing what you're intending to. Your other question about adopting, do we do we take our process and bring the technology into it, or we take the technology and modify our process? I think it's a combination of both, right? You don't want to take it out of the box, but your existing process may not fit well with the closing piece, right? So I think you got to take pieces from both and merge them together in a perfect world. And that's really what it comes down to.
That's a great point. I'm going to continue to put some of these ideas in the chat as we're talking, because I think, that's what a lot of the folks on the call need to hear and are going to be thinking about as they move forward. Raj, we'll bring you into the conversation quickly on, you're hearing all of us talk about all the different moving pieces. What are some of the questions that you get most frequently on eClosing, or what do you hear from the lending community that maybe we haven't touched on, or is a part of that business process strategy implementation that you would recommend the folks on the call be thinking about as well?
Yeah, so I think let me first touch on the business process strategy. When it comes to the question of whether lenders should fit their process into the technology platform they select or vice versa, right? I think the standard off-the-shelf eClose solutions have matured significantly in the last few years, because a lot of these big lenders have taken those systems and tried to deploy in multiple different scenarios, multiple different markets. So that feedback has been, given to these technology vendors. So they have, made a lot of changes to their system. For example, one of the things we always struggle, or at least I should say, people struggled, 2-3 years back was, hey, I'm going to let my borrower sign note and other non-notarized documents before they meet the settlement agent. Okay. And then I will just have them sign this small package of, notarized documents when they meet the settlement agent, either electronically or on a piece of paper with pen, right? But then how do we track the progress of the documents that borrower was supposed to sign before they meet the settlement agent? So the eClose solutions have come up with some kind of tracking mechanism that clearly sends a real-time communication to the settlement agent saying, hey, borrower just signed these 10-15 documents, right? And then they automatically disable printing out those 10-15 documents from, settlement agent, by accidentally opening it up again for, re-signing it, right? So some of those kind of things have already been made part of the technology platform, but these are the things that some of the initial implementers grappled with in terms of coming up with what is the process that I need to follow. Another example would be, if I want to offer a remote online closing to my consumer as a lender, how do I make sure my consumer is ready for remote online closing? Who in my shop is making a call to the borrower and saying, hey, borrower, do you have internet connection? Do you have a computer? Can you participate? Will you be on the, in a location where you have internet connection on the closing day, so you can participate in the remote online closing process? So that's called the process design example, right? Where they try to think through, okay, what is the appropriate time to make that call? Is it going to be a call? Is it just a communication through the e-closing portal where they can respond back to the portal? Whatever the method may be, somebody need to make that, call, right? So that is an example of process design effort. So the questions we see, the questions we used to get a couple of years back were things like this, hey, I am trying to implement this process. Can you give us an advice on how do I do this? How do I do that? But now the questions are more around, okay, hey, can I implement directly the run process, or should I just start small? Should I pick a technology platform that, currently my doc provider operates, because my doc provider already, I have a relationship with the doc provider. They have a eClose platform, right? Can I just use them? So the questions nowadays more around the vendor capabilities is what we are getting. And our advice has always been this: don't just pick a platform just because you have a relationship with them today. First, define your vision. What is your vision? Do you want to operate in an environment where you offer different choices to your consumers from a e-closing standpoint, meaning you want to offer them remote online closing as well as in-person e-closing as well as hybrid e-closing? If that is your desire, then try to pick a platform that can offer all those capabilities to you, right? You may not deploy all of them at one time. You may deploy just just hybrid eClosing to start with, like just maybe employee loans to start with, or just one market to start with. But you should have one platform that can do all of your, that can meet all of your needs as you start expanding your eClose ecosystem. So that's our advice has been to the vendor partners. Yeah.
Great, thank you. That's great advice. So Scott, I heard two things in there that kind of immediately overlap with your partners, that the customer's choosing to close their loan, that the lender has a relationship with, and one he mentioned was communication and connectivity between your shop and the lender. But then it sounded like the other piece of this from your perspective are you seeing any benefits beyond just the lender and mortgage side? Like you guys do cash deals, you do other things. If we have settlement providers on the phone, we have law firms listening in because they're now looking to adopt. Can you also talk about that and the benefits you're seeing both with what Raj just said, but then also across your business generally beyond just mortgage?
Yeah, sure. Absolutely. Absolutely great points. I mean, it is the pluses, again, just to go back to sort of the pluses, these are just things with consumers making their lives easier, making, in a business, from a business perspective, it's great customer service if we can offer these folks, even if it's just I just got an email we're on here, somebody wants to sign a deed, they changed their name, they got married, little things like that. We're talking about instantaneous versus FedEx back and forth, whatever it may be in the past. So they sign it electronically, we record it electronically, the whole process is done within minutes. They can even Venmo us the payment. So I mean, it's just the ease to the consumer as things get accepted. And I will use that, as a qualifier, because we are still seeing, you're spending $1 million. We just had a purchase in Maryland, so it was $1 million plus. And we wanted to do a RON, and the buyer said, I just don't feel comfortable with that yet, which is totally fine. Like Raj said, there's going to be some time for implementation, but especially for the quick little things outside of that full closing package, just instantaneous for the consumer. And it's really just another plus.
Yeah, right on. I mean, I think that that aspect, particularly in this market, Scott, that you mentioned, which I was just thinking about, which was a purchase scenario, right? I'm moving into Massachusetts, or I'm a client of a Massachusetts realtor or law firm, and I'm moving out of Massachusetts, whatever. Second homes, I don't want to have to go to the community where my second home is necessarily. If you offer me the way to sign it from my house, my primary house, or my work, or what have you. Jay mentioned earlier, like the veteran deployed abroad, very popular use case that used to take a mail order, as we all remember, back and forth, can now be scheduled and done at a variety of different times. So I don't want to lose sight of that. I think that was a key point. The use cases here are real families, real customers that now get flexibility to really kind of free up decision making around their move or decision making around that. So really appreciate that.
I'll just add, Jeremy,
Yeah.
I'm sorry. One thing that's really, really interesting, especially here in Mass, is that we always have a lot of, in-laws, parents who live out of state, but are deed holders or mortgage holders, sending around, coordinating, this has to be sent on this date with the lender. Now it's instantaneous. We can just send it out. I mean, talk about it's just as, relieving stress-wise as those folks overseas. It's created, it's eliminated a point of real contention in our business quite a bit in the last few years.
Great. Well, we'll take this time, because we're talking about Massachusetts. I think now's a good time to make sure we don't miss this before the hour is up. Debbie and Scott, we'd like to ask you a couple specific questions about Mass and the adoption and the regulations. So Debbie, why don't you jump in first and tell us what you're hearing from an MBA perspective from the Massachusetts Secretary of State and what that means for the folks on the call.
Sure. Thanks so much. Just to kind of give you a background on the whole legislative process for Massachusetts. going into Ron, there has been a consortium that kind of has been working together or worked together for probably a good 3 years, trying to get and craft the language together. You know, it was the MMBA, it was REBA, it was Mass Bankers, the credit union, DCU was part of that, Notarize, and we all worked together for really almost 3 years. We were dealing with legislators at the State House. We were in touch with the Secretary of State. So part of it was, you know, there were 2 issues in Massachusetts. You know, everyone has mentioned, yes, we're the attorney state, and so equally as important as Ron was also the idea of codifying the NRICE decision here in Massachusetts and making that part of the legislation, so that regardless of how that mortgage was signed, remote online notarization or with ink, that an attorney was the one that was going to oversee that closing. So the law itself was passed in March of 2023. It was effective as of January 1st, 2024. And with that January 1st date, it said to the Secretary of State that you needed to write the regulations to implement the law. So we've been in touch with the Secretary of State's office because we wanted to get an update on where they stood, because obviously it's December 6th and we haven't seen anything. So just to let you know, behind the scenes, the Secretary of State's office has been working with the governor's office and the governor's council to create the online notary application portal. And that includes the raw notification requirements in the documentation that's going to be required to be submitted to their office for review. They are working on drafting regulations that also is going to, of course, include any training requirements that remote online notarization notaries are going to have to go through. They're researching best practices for technology and cybersecurity standards because they need to figure that out so that they can certify the communication technology providers. And finally, they wanted to pass along that there's a lot of steps needed to implement Ron here in Massachusetts, and including, they wanted to remind me, the challenge of funding the whole process to get it started. So they are working diligently on this, and they have assured the MMBA and our partners that they're going to be providing us with some updates as soon as we know anything more.
Great. Well, thank you for keeping on top of that and making sure that the MMBA members have that, the latest and greatest, especially when that starts to come out. Just from my perspective, having worked in the space, and Jay, if you have any experience on the state by state aspect, feel free to chime in. But I think it's fairly common for us to see states that either have like some registration process to endorse a notary becoming a Ron notary and some sort of technology provider, either minimum standard or registration process. So for those that are operating in multiple states and want to pick a provider or choose a process that'll work, this is pretty standard operating procedure in most states. Is that what you would say too, Jay?
Yeah, so the Secretary of State will list the Ron providers that are acceptable to use in that state. The notaries will get electronic seals, and that's a process for that. But you know, some of the Ron providers already have that process nailed down, so you will become an electronic notary. All of what you're saying, Debbie, is the process, from my understanding, that everybody else went through as well. And it moves really fast once you're there. But to top all of it, you know, MISMO has a certification process where they review all of that information for Ron providers. So you have to get approval there as well. So we talked earlier, these are all the guardrails that are being put in place. And I think lenders can view these as the guardrails to protect your closings, your information, your data, that work is being done behind the scenes. But you know, special thanks to Debbie for running this through. So.
Absolutely. Thank you, Debbie. So Scott, you mentioned being nationwide. And so that means you've adopted this in other states, including other attorney states likely. any thoughts, hearing what Debbie said, or knowing that you're going to do another implementation, another, go live in Massachusetts? Any advice for the folks from the other states you've gone live in?
So it's interesting. I think that, we are, and obviously we're not Bank of America, we're not that size, we're a bit more nimble. We've been able to, transition pretty well. The issue we're seeing, and even in New Hampshire, for example, where, full RON has been in play, is a lot of lenders either aren't up and running, or they're only doing it with certain programs, which is to be expected. So I think that patience is really all of I said. We've sort of really sprinted, training our attorneys, training our closers, training our notaries, training our staff. And a lot of times RON is not an option. So it's a slow walk and run. We've done a RON, I checked before we get on, in about 22 states now. So it's out there. It's been great. I think Jay made a really good point. We've seen all of the pitfalls that she suggested. We have seen, we've had a couple of instances where the tech didn't work, or our closer wasn't up to date, or didn't know what they were doing. So it's all been a learning experience, as these things tend to be, but it's just patience. I think it's much like, TRID or any other major change to our industry. The NAR suit, it takes some time, everyone's alarmed, and then one day we're all going to wake up and say, oh, it's just a normal part of our workflow. So I do think that tuning out the noise a bit, wherever we go, MBA or whatever conference we're at, it's all eClose, RON. And the reality is that we like to say, it takes at least two to tango. So if the lender isn't ready, or isn't offering eClose for whatever program it is, or if the consumer isn't interested in doing it, we can't just force it upon everybody. So it's going to take some time. And I'll certainly more than happy to field any questions from any of our colleagues or lenders, anybody, to pass on experiences we've had that you can learn from, because we've certainly had some learning experiences along the way here.
Excellent. I'm guessing there's folks on here that'll definitely take you up on that. So if you are listening for questions you have for the panelists immediately, go ahead and start to put those in the chat. We would love to ask some questions here in the closing few minutes that we have. And while those are coming in, Raj, the one thing that I thought of while we were talking about orchestrating all the moving parts was there are some of those eNote secondary market approvals or relationships that you want to think about. And I don't think we've quite mentioned them. So Joe, feel free to chime in here as well. But Raj, Freddie Mac will post their approved vendors, for certain things. But can you talk a little bit about like MERS and eVaults and how those or even warehouse lenders might play into some of the questions you get, or might play into the process as you think about it for these folks?
Yeah. Let me summarize my answer by saying, actually reusing what Jay said earlier, which is we are not replacing any stakeholder in the ecosystem. All the stakeholders are still going to be there. So if you are currently using warehouse provider for funding your loans, you continue to do so even with loans that have electronic notes, right? Mm-hmm. The difference is, in the paper world, you are physically, shipping the note and other documents that warehouse lender needs for them to, review your loan file, right? You will just do that through electronic means. And that's where the systems called eVaults come into play. And eVault is nothing but a secure system where you can store electronic documents. Mostly in the industry currently, this system is being used for storing electronic notes. And then how do you deliver that electronic note from eVault of the lender to the eVault of the warehouse provider, right? And that's where the MERS e-registry comes into play. That is, think of it as like almost like a registry that tracks at any given point of time the rights holders for a given loan, right? Plus, it also enables a secure delivery channel. So there is a secure delivery channel it establishes. So you don't have to worry about having a system-to-system connection from your eVault, meaning lender's eVault, to the warehouse lender's eVault, right? You just need to integrate with the MERS e-registry, which provides the secure delivery channel for your to go from your vault to that their vault, right? So think of MERS systems as a way to track the rights holder information, and also a tool that facilitates the secure delivery of notes between different stakeholders in the industry, right? Other than that nuance in terms of the MERS registry, everything else is pretty much the same, right? You still work with warehouse lenders, you still work with investors like Freddie Mac, you deliver the loan data to Freddie Mac or Fannie Mae the same way you deliver today, right? You need to still get your loan certified by Freddie Mac or Fannie Mae. The difference is, in the case of electronic notes, I'm able to deploy a automated process to certify the note. That means I can certify the note faster, and I can fund your loan faster. That means I can improve your liquidity. I can, reduce your warehouse and interest expense, right? So that's how I would answer the question.
No, I appreciate that. That's a key piece, and especially now that there's, that savings, another thing for lenders to point to for why they're doing this. So Frank, I think you're on here from Encino. I want to bring you in just before 2. We're going to lose Scott right at 2, and also for the panelists, maybe prepare a final thought after Frank jumps on. We'll go around, we'll do one final thought, and thank everybody for joining us. So Frank, thanks for putting this together. Thank you, Encino. I'll turn it over to you.
I appreciate it, Jeremy. Just want to start by thanking Jeremy for being our moderator, and then all our panelists for joining today. For those who don't know me, my name is Frank Pasterchek. I'm an account executive here at Encino, formerly known as Simple Nexus. Also a member here of the Massachusetts MBA Tech Committee. Just wanted to speak briefly on Encino, see if we can help anybody out. So Encino Mortgage, we offer complete full cycle point of sale solution as well as e-closing capabilities. Pretty unique what we do, encompassing a full scale single sign-on solution for your borrowers. So they're in our mobile app as well as online portal throughout the entire life cycle of the loan. So from that first point of engagement all the way through e-closing, which helps create a better borrower experience for your better borrower experience for your customers. We also offer all 3 different types of e-closings as well. So we offer hybrid as well as RON. Then we did just roll out our own native vault. And then we're also adding lift to your backend sales processes as well. So with sales as well as closing and processing. Please feel free to reach out to me with any more questions on technology or how we may be able to help. But just really appreciate everybody coming today. So
thank you, Frank. So closing thoughts, Scott, we'll start with you.
Sure. First of all, thank you everyone for having me. Jeremy, great job as always. MBA. Frank, thanks for the sponsorship. Frank, I assume you're going to be sending me a check for my time. So.
Send me your Venmo.
Okay. And no, I think it's a learning experience, and we can, if we're working with attorneys or title companies on the other side of deals as well, and they are using this technology, it's going to make it easier for everyone. So we're bullish on collaboration. I put my email in the chat box, so if anybody wants to reach out to me directly, please feel free to do so. Be happy to chat, share our experiences, pick your brain, etc. So,
right on. Thank you
for having me. Thanks, everybody.
Yeah, thank you, Joe. Final thoughts from the lender side.
Yeah, a couple thoughts there, right? Educate yourself on the process. I know Freddie Mac has a great kind of how to get started document out there. I think we have in resources, but educate your staff, the borrowers. And test every scenario you can think of. But start out, as Jay mentioned earlier, maybe on some of those plain vanilla deals. Those are the easy ones to get through the process first. So again, I want to thank everybody here as well, and thanks to MBA for hosting this.
Thank you for being here, Jay.
Yep.
Raj, we'll give Jay the last word.
Yeah, again, thank you, Jeremy. Thank you, Debbie, and thank you, MBA and Frank, for this opportunity. So I just want to reuse what Joe said earlier, which is e-closings is really a must, not an option, right? So given that it is a must, I encourage each one of you that is listening to take a step and start doing something. Even if it is hybrid e-close, just for employee loans, just for one market, just start somewhere and learn from it, and and tweak your process before you rolling it out broadly. And if you need any help from Freddie Mac, my team is standing by. And I just put the team's email address in the chat, which is emortgage_team@freddiemac.com. Thank you all.
Thank you, Raj. And Jay, final thoughts.
Thank you. Thank you for this opportunity. Awesome panel. Thanks, Jeremy and Debbie. I think to sum it all up, if there's one thing anybody listening takes from this, just know that there are many people working behind the scenes for you on this. All you have to do is raise your hand and say, I'm ready. And then as Raj said, you know, his team comes in. There are title companies that come in. There is your technology team at your vendor organizations that'll come in and work through processes. Overall, the message being the guardrails have been set up. All we need is for your participation in this. And then we take care of a lot of it for you through our own channels and being a solid vendor partner. So thank you, everybody. Jeremy, thank you so much for moderating.
Thank you. Thank everybody. Thank the audience. You know, we were doing this for you, and if we didn't have such an enthusiastic outpouring, it would have made for a less energizing panel. So it was because of you joining us that we're able to help out. To the points made today, it's about collaboration. It's about moving forward, and we're going to do that together. So thank you to the MBA Technology Committee, Frank, Eric, Mike for putting this together, Debbie for always organizing and keeping us on track, keeping us on topic, and then for the work you do with the Massachusetts folks at the Secretary of State's office and the regulators and in the legislature. Thank you. Have a great day, and we'll continue to move forward. Talk to you soon.